Alrighty guys, what is going up? In today's video, we are going to be talking about Nu Holdings, ticker symbol NU. This is also known as Nubank. Now, the company behind this is a fintech stock, so it's going to be very, very similar to a lot of other companies based in the United States. This company is not based in the United States. Its main audience is going to be in Brazil, Mexico, Colombia, and Argentina. And if we actually look at the website, it's almost like a combination of like a SoFi or like like a Chime, a bank like that. It's an online bank, so they're not going to have any brick and mortar locations. They do have a business account where you can obviously sign up for a debit card and then the credit card. And then for you, they have a credit card and they have investments, life insurance, and personal loans. So yes, it's very similar to almost like a SoFi, to be honest. You can see it does have that modern appeal to it with the credit card as well. And you can see it's definitely geared towards a younger audience. Now, when they first released this, the absolute market blew up. They made about $1.06 billion in total revenue in the first 9 months of announcing this. And the growth has continued in the year of 2021. Not to mention the company makes a variety. They make a lot of money from a little bit of everything, almost like SoFi. They have those debit cards that make up about 23% of the total revenue, and then 15% came from about total personal loans. Not to mention they do have fees and other fees and things when people swipe their card, so they make a little bit of money off that as well. Now, one of the downsides of this company right here is they are not profitable. They lost about $99 million in the first 9 months. So when they made about that $1.06 billion, they still lost about $99 million dollars. So that is something you have to understand, is the company's not profitable. But to be honest, it's very, very common to see these companies that are very, very small starting to build up. They're not profitable. It's very, very common. Not to mention, guys, if you compare it to like Tesla was not profitable for years. They became profitable in about 2018, but they started working on their cars in about 2011. So there was that time period where they were pretty much just using investors' money to grow the business. And that is one thing you have to understand, is that this company is going to be a little more volatile, because any stock that's not profitable is more volatile. It does go up and down at a little more of a rapid rate. Not to mention, each Nubank customer brought in about $5 in monthly revenue, so per person. So that's actually pretty decent. So what that means is every person they have, so they by the time they're done, with their loans, their credit cards, they bring in about $5 total to the company, which is pretty solid. But not to mention, guys, if we actually start looking at the chart, they just released their IPO. And one of the main reasons why a lot of people are talking about this stock is because the great Warren Buffett did invest about $500 million into this company. And that is why a lot of people are saying, hey, maybe I should hop into this thing. If Warren Buffett's hopping in, maybe I should. But he's obviously going with it as a conservative approach with $500 million, with somebody that is worth hundreds upon hundreds of billions of dollars. So you have to understand that as well. It does have some pretty strong resistance right now at about $11.87. You can see it's hit it several times, once, twice, almost 3 times, 4 times here. So that is going to be the hardest point right now on the stock to break above. I do think within the next couple of days we will see a wedge starting to form and a possible breakout happen, just like in here. So once this ties up, if the buying pressure continues, we should get that breakout of $12, possibly hit $12.20, $12.15. Now, the big and main question a lot of people are asking, should you buy this stock? And at the end of the day, I definitely think it carries a lot of potential just because of how much money it's made in the first 9 months. It made that it made over $1 billion, which is a lot of money, especially in the first 9 months of being, operational. So the mindset I have with this is, yes, take a little bit of a more conservative approach, just like Warren Buffett, but it's better to have shares and just let it ride, it's going to be more of a riskier, higher speculation investment, but still carry some risk and some overall reward. Not to mention, guys, a good strategy would be dollar cost averaging, so you can get a good average price for your shares. It's going to be an amazing strategy, especially among growth stocks, because you can use the volatility to its advantage, right? So if you're buying up in here at 12 and you're buying down, boom, 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 now your average cost is 10. Once the stock recovers, you make a lot of money in the long term. You just have to be very, very consistent with your investment. And I honestly think it's better to have some shares of this company than not have any at all. So I'll probably pick up a couple of shares, maybe about, $500 to $1,000 worth, definitely something under 1% of my portfolio, but still have it and try to make some money off it, guys. So that is it. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.